Up next, we have the first presentation in the finance part, the second part of the forum, which will be presented by Mr. Wang, Senior Director at the Deutsche Bank. The presentation will be titled GoMongolia, the Hidden Gems in Asian Credit Markets. Ben specialized in frontier markets, debt, and will highlight why Mongolia is capturing growing attention from the global investors. Please welcome.
Thanks for having me here today. My name is Ben. I'm a director at Deutsche Bank, Debt Capital Markets, based in Hong Kong. I'm always very proud of how many times I've been in Ulaanbaatar in the past 12 months, without being detained by the customers like Zhou Yong, including the most recent time when I was there, it was minus 30 degrees. And then I actually took a walk outside just to feel the sun and the breeze, as a lot of the speakers mentioned today. And then it feels good to be able to experience the energy and vibe on the ground in a country, a city with an average age of population of 28, especially while Mr. Kopa is here in New York with us today. I think all the fun factors aside, it has indeed been a true privilege to have the opportunity to work with so many prestigious Mongolian issuers here today, and with the honor to talk about how we have witnessed Mongolian credit markets evolving and growing in the past few years. Talking about highlights of some of the recent transactions we have worked on. The most recent 5-year, 500 million new issue from the Ministry of Finance that achieved the tightest spread over U.S. Treasury with an issue spread of 222 basis points. The Mongolian sovereign has not only outperformed many of the EM sovereign peers, showcasing global investors' increasing confidence on Mongolia's robust economic prospects and prudent debt management that led to the rating upgrades. It also really has set the new benchmark for all the public and private sector issuers from the country in the international bond market. The 500 million debut issuance from the capital city of Ulaanbaatar, which was issued at a spread of 120 basis points over Mongolian sovereign and traded as tight as 30 to 40 basis points at one point. Of course, before the Liberation Day. That was an eye-opening event for myself as well. Seeing substantial interest from global accounts, real money accounts, subscribing like 20 to 50% of the deal size with single tickets, and that later we got complained, by more investors for not showing them this opportunity, or not able to fulfill their order allocations. The global bond, which was an ice-breaking exercise for the private sector issuers and being awarded the best frontier market deal of the year by IFR, which I'll talk about a little bit more later. And the liability management exercises for the private sector issuers like MIK, MMC, we really leveraged our expertise in structuring complicated, bespoke refinancing solutions to assist the issuers successfully tackle their maturities in a more challenging market backdrop back in the days. And our cooperation and service did not just stop when the bonds were printed. We continue to work with our clients from both issuer side and investor side to make an active secondary market. Our Asia credit trading team traded more than $100 billion cash bonds on secondary market with a market share of 16% in 2024, among which we have seen an increase the trading volume in Mongolian credits. For instance, we actually traded more than 400 million global bond alone with both offshore institutional investors as well as Mongolian domestic investors, which we later found out that Mongolia actually has a very deep onshore US dollar liquidity pool to support the market. Increased the trading volumes, broadened the audience base, and growing liquidities in the Mongolian credit spectrum. that led to very strong technical bids on Mongolian credits across sovereign and private sector issues, which result in a significant rally in primary activities and increased the contribution from the private sector issuers that accounted for more than 50% of the issue volume in the past 2 years. The Mongolian issue volume contributed to 10% market share of Asia high-yield issuance in 2024 and 13% in 2025 year-to-date. We believe it has the potential to further grow its share in the years to come. I think the strong credit impulse also attributed to stellar secondary performance from both Mongolian sovereign and private sector issuers. The sovereign US dollar bonds outperformed many EM sovereign with similar ratings and demonstrated extreme resilience in times of market volatilities. We're being told by investors that they think Mongolian sovereign trades more like a double B credit, with the perception of further rating upgrades in the foreseeable future. The global bond, again, has been one of the best performers in Asia high-yield market in 2024, tightened by 350 basis points within 6 months following its debut. A strong reverse interest from investors across global real money, Asia hedge funds, as well as Mongolian domestic demands allowed Global Bank to tap the market with an additional 100 million issuance at 8.5% yield late last year, as Odon mentioned, achieving the lowest funding cost by any Mongolian private sector issuers in the past few years. And just to quote IFR's commentary, the issuance broke a decade-long dry spell from Mongolian commercial banks and set the benchmark for the whole sector and laid the groundwork for future FIG issuance out of Mongolia. I think that comes to the natural question: what did the issuer do right to be able to achieve such strong recognition in a short period of time since its debut and became a real hidden gem in the market? I think first and foremost, nothing speaks more than a strong and improving credit fundamental. With robust asset growth and 150% CAGR in revenue, while maintaining a healthy capital adequacy ratio and improving asset qualities, Global Bank has been at the forefront of Mongolia's fast-growing banking industry. And effortless and consistent investor communications and timely updates on business and financial performance, winning them good reputation among the investor community. The week-long global deal roadshow last year, meeting more than 60 investors. The reverse roadshow we held in UBCT, the New York and Singapore investment forums, the monthly newsletters. Every bit added up to a continued growing investor base for Global Bank and other Mongolian issuers alike. And since its debut bond issuance, Global has further expanded its funding channels with global development finance institutions, the impact funds with additional fundraising in ESG format, which helped further lower its funding costs and in turn benefit its bond secondary performance. I believe this really sets a good example for more Mongolian issuers who are looking to tap into the international market with fundraising and beyond. Build on successful issuance from Global Bank and other Mongolian issuers and with their resilient performance in the secondary market, despite the dramatic volatilities we have witnessed in the past few weeks, I believe it opens the doors for more Mongolian issuers in the international capital markets. So question is, what's the next to expect from Mongolian issuers? Just here to lay out a few initial thoughts. I think firstly, the strong performance in the credit markets naturally will intrigue more interest from other markets, such as equity markets for potential dual listing, the DFI financings, allowing issuers to access a much deeper liquidity pool and recapitalize the banks while keeping up the fast pace of asset growth. Secondly, while both investors and issuers are looking for investment or financing alternatives outside US dollar, we do see opportunities for Mongolian issuers to further expand their fundings into other currencies, such as Euro, CNH, or even synthetic options with MNT as the underlying currency for overseas investors. And aside from the conventional benchmark public offerings, we are seeing increased demands from global investors on private or semi-private situations, given their increased familiarity with the Mongolian credits that allows an expedient execution with light documentation and disclosure requirements. We also expect more proactive liability management exercise from the space, which will give issuer the flexibility to early redeem higher coupon bonds in a lower rates environment, while allowing the investors to roll over their investments. Finally, we would also hope to introduce and potentially work with more high-quality issuers from other sectors. That includes more NBFIs, the energy companies, conglomerates, metals and minings, consumer manufacturers with strong cash flows, gaining access to the market. We believe there are more hidden gems in Mongolia, and we look forward to exploring more together with you all. Thank you once again for your consistent support. Thank you.